On the YouTube, guys. So I'll pitch the stream over there if you want to join. Yeah, so today, let's have a brief overview of today's PA. So up on the high time zone X levels, 12% on the hourly. So automatically looking to gear a short 15-minute DR high as well. So now just looking for a PD ray to frame off. So MWOG fair value, also the very low of the weekly SIBI. Meanwhile, ES have hit the wick behind the SIBI, with them both fulfilling their objective of getting the lower quad on the quad of that hourly SIBI, which was our dole from last week. So that was that objective was filled. So this was our short, trading the premium off 12, aligning with our PD array, yada yada, taking it back down into a discount, which was the M5 fail con. So now going into the open, although I'm macro bullish, I'm looking for us to go and fill this H1 SIBI. That's where I'd ideally like to be for shorts this week. So whether we get up there today, this is where I'll be looking for a short for an H1 to M5 on ES, particularly, right? So right up here, which is up at 5950. So we're, as kind of anticipated at the start of today, just building a base inside this H1 SIBI. And we got consumer sentiment at 10. So there's every opportunity they absolutely humding rip on data today, and they just don't give an entry, right? So in terms of where we sit, the problem I have is with London, I don't have confirmation on that low, why that low is particularly going to hold. Yes, I can start framing stuff, but I don't love it, all right? So we got my Exacorn, so this SIBI supported by the order block, which is back inside of a discount, so fair value on the hourly. It's also a discount on the M15. It's also a discount of the London DR. So if you're anticipating higher prices, that's where you'd be looking to go long, right? However, we've got so much context to run the lows still, i.e. we've gapped up massively. We're miles above the RTH gap, and we're miles above the previous day's RTH range. And we're in a deep ass premium if we get back up into here. So on the flip side of that, we can argue, okay, so why is the high going to hold for a sell day? Well, it starts to make more sense for that, right? So we have this M15 DR, and we've got this accumulation inside of a premium, sets up accumulation inside fair value. So essentially this liquidity, looking for this to be swept at the open to go and drive out the low, the 15-minute low, all right? So this would be an area for shorts to come and drive out this low, to take out this this divergence on the low. If we break through the accumulation inside fair value, I'll be moving to the sidelines. I would not look to keep shorting. I'll just be waiting for ES to get to my initial objective in the daily plan, which is all up here at 5950 for an H1 to M5, right? So H1 to M5, inefficiently delivered M5 range. I believe this is still inefficient on the ES. Is it? Yeah, no, just filled it. So this SIBI right in at the high, right? But if you're going to trade it, you've got to have context for why your M15 is going to go. So if we do rip on data, which is a potential, that's where I'll be looking. But having context for the 15-minute low when you get there. So just on the principles of X levels, this morning's short was okay. It was easy because everything was inside of a premium, right? High time frame X level in alignment with a PD array, 12% on the daily, 12% on the hourly, 12% on the M15. So everything was in a premium to take it back. Well, if you want to be long, it's okay being inside of a premium on the hourly, daily, and weekly, but you have to be in a higher time frame discount, right? You have to be in a higher time frame discount, which would constitute anything 50% to 88 on the 15. Right, that's your lowest hanging fruit. The lowest hanging fruit is fair value on the 15 when everything's inside of a premium. All right, so these are your low risk buys if you're bullish on the day. All right, inside a London discount, anticipating the London high to go. If you're bearish, again, this is going to take us back up into a premium across the board. So M15 premium, hourly premium, daily, weekly premium, monthly premium. Okay, so now it's okay. So what do we have up in here to trade short back into a discount, right? So taking price from a premium to a discount, taking inefficiencies in liquidity and price. Well, this accumulation inside of a premium on the 15. Okay, we take the high, cut off the tail, the low of the accumulation, cut off the tail, 50%. This becomes your entry, right? No PD array required. In order to validate that, you need it to sweep liquidity into it. So we have liquidity that's built up on this high up at 38 on the premium on the 15. And then we have our accumulation inside fair value, 21,327. So all about here is all mitigated, right? So all of this is liquidity. So the only thing that can hold it is 21,328. So the opportunity is you can either look to frame a short off accumulation inside fair value to drive out this 15-minute low, right? Anticipating the London high to hold. Or you're framing your entry long off the London DR, anticipating the 15 low to hold. I do not like this low. I can frame a reason as to why it's going to hold. This is my hexacorn, right? So this SIBI above the accumulation. Okay, with the order block inside of it, hexacorn. So we can respect this for high prices and just absolutely rip on data. Absolutely we can. However, RTH gap, RTH range, flat bottom on the M5, wrong SMT on the low. You've got context for it to come and drive out this 15 low. So the alternative is if we do not sweep this liquidity at the open, which I anticipate we do, but if we don't, and it just dumps, the opposite is to frame a long underneath that low. So for me, that would take us back inside of here. And I'll be keeping an eye on ES inside these OBs, which again is another hexacorn, which would align with us being back inside of a higher time frame discount, right? So if we want to be bullish, if we want to be long, we want to be long inside of a higher time frame discount. If we want to be short, we want to be short inside of a higher time frame premium. All right, where we are right now is neither or. All right, you're in between the 38 and 62. It's a no-go zone. Liquidity on the high, right? This is liquidity. So if I do take this trade short, it's purely going to be based because we captured this inside of RP this morning. The little London short. So just playing with cushion. However, if it rips through this high, I'll be moving to the sidelines. I will not be looking to short nor long. I'll just be waiting for ES to get up to the H1 to M5. On data, which is at 10 o'clock. All make sense? I hope so. I don't particularly want to repeat it. crystal clear. Clear as mustard. So again, you know, this accumulation inside fair value aligns with being inside of a premium on the London DR. So if you were looking for a sell day, that's where you'd be looking to go short, right? So it's a fight between a buy day and a sell day as a secondary entry, right? So essentially, I'll either be looking for a long out of here or a short out of here. So it'd be interesting to see where we open up on across the Nasdaq today. We got a new Nasdaq div. Should take that back. It's DST up on the high. Hey, you're welcome, Colin. So if it does move through the accumulation inside fair value, be extremely careful trying to short. What you're referring to, dude? Which high are you referring to? $450. For a Mac TS. There's no Mac TS short here, bro. Yeah, but so did ES. Well, no, it's not a Mac TS, is it? Go back to bed, mate. No, I can't even dig you out of the hole either, mate, if I'm honest. You got the potential creation of a Mac TS here, though. It's currently being created right now. So if I do take this, I'm taking this light size and just using profit from this morning. I'm going against my overall bias, which is bullish. So this is building a base on the low of this H1 SIBI. All right. Mindful, we've got news at 10, which they could use to absolutely humding. All right, so rip this on data. So this is what you'd want going into the open or on data. Volatility putting us into that above this liquidity. Let's go and run out the low. There isn't a single inefficiency left in any of that, right? The only SIBI that's left is here, right at the point of origin. All of this is mitigated, apart from the very high on the 15 up 5.3. These are all relative equal highs. So if it goes through this, move to the sidelines. Yeah, so where I'm at the moment is email. Either take the low to come run out the buy side, or if this is still intact at the open, accumulation inside fair value to run out the low. So we're kind of in between the two at the moment. But essentially, if you're short bias, you want to be looking for a short inside the London premium in alignment with the premium on the X levels, right? Which is essentially where we've just hit. If you're bullish bias, you want to be inside of a discount on the M15s. So where we are, we're sort of in between the two going into the open. If that fails just short, there's absolutely nothing I can do about that. For me with that model, the model has to be 50% of accumulation for me to trade that model. But yeah, so it's either looking to short here, and then if it blows through this high, moving to the sidelines, because it's more likely it's going to take out this buy side. So essentially looking to either short here to come and drive out the low, or if this is still intact, look to drive the low to come and take out the highs. That's currently where I'm at. I'll be keeping an eye on ES on this low. So essentially it'd be keyed off ES down at 5876. I'll be waiting for ES to get down into this. Essentially fair value on the daily, 70.5 on the hourly X levels, right? So back down inside of a higher time frame discount. All right, fair value on the daily, neither premium nor discount. On the hourly discount, taking out the 15 low to then trade price back higher. Or looking to short a premium on the 15, premium hourly, premium daily and weekly and monthly to go and take it back into a discount on the hourly. So those are the two trades for me for the open. No, you're welcome. Missed my entry there by 10 points. has left a doji. Price is going back up. So ES down inside of here is where NQ down inside of here is where I'd have an interest for a long, if we haven't fulfilled this high in time, or this M1 SIBI, which has now been left behind. Keeping an eye on NQ down at 5877. Just chopping in between the two entries. So don't forget you got consumer sentiment today at 10 o'clock, right? Can shop going into consumer sentiment. Be mindful of that. Patience, don't force it. I'm trying a small piece here, light size. Trimming some here. Trimming some more here. Looking for it to get up into that doji, and then the accumulation inside fair value up at 326. Mindful that we got news at 10 o'clock, so I'm just trimming early, just so close to news. 20 minutes to news. Anybody else caught this long when I went long? Anybody else in this? If you are, make sure you're paying yourself here. Have your line share off. It's a nice little 40 point trade so far. Good stuff, Andy. Well done, mate. Might want to come down and gap fill. So just be mindful of that. Where do we open up on NDX? Yeah. Stuff, Jamal, what I mean? I'm just looking for this doji up at 95 and then just holding runners for the accumulation inside fair value. Just make sure you have paid yourself at fair value. It's a nice little 40 point scalp off the low. I'm also mindful of for red pillars continuation, right, on the 15. All right, sign of weakness going out at 62. So you want to be mindful of this. If we do, so what can happen here is we come up into this and then we, oh God, comes up into here. Jesus, what's it doing? Goes up into here, comes back down, and then we go through it. So just make sure you're paying yourself en route. You can easily come back and gap fill on data. So a sensible place to pay yourself again is in 88. Right in that grey box. Make sure you pay yourself right there. This is where it can reject right here. 88.79. But it's going to move lower before going higher again. I'm just holding these runners, but I'm scaling out en route. So please make sure you're paying yourself here, right here. If it's going to reject it, we'll reject it. I'm just holding for this SIBI up at 94, and then this red line 28. Got 4 micros left. If you're short bias, this is where you'd be looking to short. Let's come and drive out this low. So in terms of X levels, we're back at fair value on that hourly, right? Back at fair value on the 15. It's just sort of no man's land, really. You just either want to be in your long, but make sure you're paying yourself here. It's a high risk short, just fair value. Looking for this little doji up on the high. We want this to break. For us longs, if you're in this long with me, we want this to break. If you printed with me this morning, give us a smash a like on the old YouTube streamage. If you found value, you learned something, even if it's a little tiny thing, right? Small gains add up over time. I promise you. Have faith. So if you printed with me this morning, you caught this low, and you're still long, smash a like. This is exactly what we want to see. It's exactly what we want to see. This is good news. It's good news for our longs. So you just want to be mindful, we're coming all the way back up into premium here, right? On the X levels, all the way back into an M15 premium. So if you're trading essentially the underneath of an H1 to M5, we're going to be looking for this to break. Really good stuff. Nice one, guys. Really good, really nice trade. Just going to trim one more off here. So this is now 70.5 on the premium on the one. Looking for it to do essentially a M5 discretionary for those inside Red Bull. Right, break the 1, 5 prem. Beautiful trade. Beautiful, beautiful trade. Almost 100 points at the moment. Really good stuff, guys. Patience. Just let it breathe. You've done, we did the analysis all morning, right? Waited for our entry, right? Waited. Trigger came in for those inside RP. Boom, there's your entry, right? Back inside of a higher time frame discount on the X levels. Remember, if we want to be long, we want to be long inside of a higher time frame X levels discount, right? This is a discount on the H1, right? 70.5. Yes, 70.5 is where we want it to be long, right? Right in here. So inside of here is where I'm looking for my entries. Okay, now just looking to support the confluence, taking it back now into a premium. So where we are on the hourly is now we're back inside of a deep ass premium, right? Right, premium. So this is where you want to be scaling your positions out. You want to be entering a discount and then scaling out as you go back out through the dealing ranges, right? So our 1 minute DR is still all the way up here. So that's where liquidity sits, right there. And then here. So those are the two liquidity pools. I want to see both of those go. But I'm paying myself inside of a premium. All right, so this X levels, this 1 minute. So coming down to our higher time frame X level. All right, looking to frame our entry. Ooh. Now looking to take back into a premium. Now looking for it to come and take liquidity. This can come all the way back down to here. I couldn't care less. I'm already paid now. Right? It's just runners from here. Right? But looking for it to come and take the 1 minute liquidity into a 5 minute premium. Alright, so it can reject this SIB if it wants. However, I'm going to hold my final positions for the accumulation inside fair value, which is 32750. So we got, how long we got until news? So we got 10 minutes until news. So again, the same thing can happen with the accumulation inside fair value. So it can come back up into this reject. I'm not going to short it now because it was either one or the other, right? We either came up into this high to run the low, which we failed just short, or we're going to run the low to come and drive back into the high. So we're doing the latter, right? So I'm not going to flip flop. I'm not going to trade this up to here and then short. I'm basically just trading this up to here, and that's going to be me done. That's my morning box, right? So one trade London, one trade New York. Happy days. Bish bash bosh. What's up, E? Who's on? Who we got on YouTube? YouTube. Anyone on YouTube? Take this. I'm on YouTube today, guys. If anyone's inside the Discord, wondering where the hell I am, I'm on. I swore. I'm on YouTube. Anyone on YouTube take the long? You gotta have context of why you're anticipating the Asia low to go. You can't just say just because it's the Asia low, would I anticipate the Asia low to go? You know, you gotta have context for why the Asia low is gonna go. You know, we can come up into this accumulation inside fair value and go on a hard dump down to the Asia low, sure. But that's not what I'm looking to trade. You're essentially looking for, if you're trading the hourly, if you're looking for the Asia low to go, you're looking for the hourly low to go, right? Pre-news, unlikely. So we literally all we've done is just take price from a premium to a discount. That's essentially what we've done. But we've done the opposite, right? We've taken it from a discount back into a premium, right? That's what we've done. If you look at the hourly up here. So what we're always going to look to do is when we get down here is now we're looking for price to drive back out through our dealing ranges if we're bullish, right? So we can start on the 15 seconds. This is our 15-second dealing range. Breaks the 15. 1 minute, 5 minutes. So all I'm doing is scaling out inside of my X levels, looking for liquidity and inefficiencies in price. All right, that's all I'm going to do. Just scale out en route to my objectives. From a higher time frame POI, right? So we're just baking a cake, right? But we start off with the cake and then we go back out through the ingredients, right? So these are all our ingredients until we get to a new cake and then we go back out. So that's how we trade. All right, that's how price moves algorithmically. Price seeking inefficiencies and liquidity in price, liquidity, inefficiencies, moving from a premium to a discount or vice versa. That is ICT. And what X levels does, it provides you a framework to trade that. Your job is then to overlay the models and context and everything that we teach inside RP on top of that to create a high probability trade setup. And we do it all the time. So there you go. There's my next trim, guys, right there. So I'm just going to go just below it. Not going to be greedy. So I've got one left, one contract left for 26.75, and then that's me. This indicator that I've had built is in collaboration with 2 degrees. Anybody else still holding runners? Anybody else still got run? I've basically got one MNQ contract left now, right? So we've taken the liquidity. We've gone back into a 5-minute premium. We are, again, fair value on the 15 in a premium. So essentially we're a premium across the board once it gets into this little 1-minute fair value gap, right? Which I'm anticipating it to do. Okay, so we're in a premium across the board. So price can reject here, all right? So what we could end up getting is, if you're still holding a runner, is we come up into here, come all the way back down into our M5 discount. So we offset accumulate, right? So essentially we can do this and we can move higher again. Okay, so, but that wouldn't shake me out, because as a turtle soup trader, I'm entering on the very low and I'm scaling out of my positions. Okay, so now I'm up here. I know that price can reject a 5-minute prem and offset accumulate. It's not, I don't care, I'm already paid, right? Whereas most traders will be looking to find their primary entry, their first trade here. Right? You know, we've already taken 100 points out of the market, you know, before that's even happened, right? So for me at this stage, I've just got one MNQ left. I don't care what it does. It can come all the way back in offset. I'm just going to hold it. Or it's going to go and deliver up to my final target, which is what I'm anticipating it to do, up inside accumulation, inside fair value. Either or, I'm completely fine with. Couldn't care less. So just to show you my trade. So this is my trade here. All right, so down in at 21,206 and just scaling out en route. Right, so one contract left. That's it. So right inside of here, guys, right, this is, like, if you've not already taken 90% of your positions off, you're mental, right? We're now back inside of a higher time frame X level premium across the board. All right, so please make sure you have paid yourself. Are we all on board? Are we all on board? Yes. Yes, 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 yes. Oh, sorry. One sec. What's why, Jamal? That's what's this essay? What's to save me having to read it? What's the general gist, Jamal? Come on, almost there. Ooh, baby. 2 points short of my final TP. 2 points short. Don't blue balls me. Don't blue balls me. Don't blue balls me. Not on data through 10 o'clock. Don't you dare blue ball me. All right, there you go. That's me. That's the trade complete. Do we get a yeet or do we get a yeet? Are we getting a yeet?
Bosh.
Are we getting a bosh or are we getting a bosh?
Yeet,
son.
Bosh. Yeet, yeet.
Congrats, guys. Well done. That is taking the very low of price to the very high. Congrats. Right, so if you go in at 200, took it up to 325, you're taking 125 points out of the market. Right, but no secondary entry shites, no inverted fair value gaps, no breaker blocks, none of that crap. Right, primary entry, turtle soup trade off the very low. Right, there she is. Right, so this is how I trade. I enter my full position and I scale out. I scale my positions, right? And all we're doing is we're going to take inefficiencies, liquidity, and price as we move price higher. All right? So right up inside of here, we're now bang slap inside of a higher time frame premium. I don't want to short this now because it was either or. Remember this morning, we're either going to short this to go and run the low or we're going to take the lows to go and run the high. I'm macro bullish, right? For ES to come and drive up all the way to fill this SIBI and to get into this H1 to M5 on the high, right? I don't want to go into all the reasons why now. I spoke through it in Discord in Red Pill this morning. So that is literally it for me. I don't have any contracts left. I'm out, full position, done. So how did you know that that was the low on what criteria? So yeah, purely utilizing the principles of X levels. All right, and obviously I can't go through everything on YouTube. But what I'm known for is my ability to read context, Zemlu, right? It's not just a case of, okay, here's a breaker block, let's trade it. There's so much that goes into a trade. Like if you're just trading on the principle of a breaker block and you're taking losing trades, it's because you don't understand context, right? And context fundamentally comes down to a couple of things, primarily schematics and market structure. Market structure comes in the form of X levels, and it's the principle and understanding that price moves from a premium to a discount and vice versa, right? Well, with the context, for us inside of RP, we know that this is an H1 to M5 on the high. I know on the flip side of my model, once an H1 to M5 terminates, which is below the 15-minute low, you're going to get a pullback all the time. So I'm already looking for a long underneath the London low, right? This was also SMT with ES, so I knew that price was more likely to come and sweep out this low. Okay, so at which point I'm just now looking to frame an entry inside of my higher time frame discount, right? And as I mentioned, I need to now find a PD array in an alignment with a higher time frame X level. So a higher time frame is anything M15 and above, okay? So when we're up here, we're inside of a premium across the board, right? Anything 50 to 12 is a premium. 50 to 12 on the hourly, premium. Daily, premium. So anything up here is a premium. Down here, 62 to 88 is a discount, right? And we've just swept liquidity on the 15, right? Into an hourly discount. So now I'm going to look for my PD rate. Well, in here, this is something called an X-corn. It's something which I developed, which is the SIBI below the swing high supported by the order blocks, which is what I mentioned, right? So inside of here, I'm now looking to frame my entry. Well, wicks do the damage, bodies tell the story. Okay, so on the 5 minute, this horrible little wick, oosh. But inside of Red Pill, I teach things that you should be looking for on the very low that sets up your buy program. All right, and we got that. Red Pillars will know what I'm talking about. Okay, so inside of here, as soon as that was given, that was my green light. Inside of my X levels higher time frame discount, I'm now going to take price back into a premium, right? If I am bullish, right, which I am. So all I'm looking to do is utilize the principles of accumulation, manipulation, distribution, right? So this is accumulation. Accumulation. Oh, geez. This is wow. Accumulation, manipulation, distribution. So as a turtle soup trader, I'm always looking to trade the turtle soup underneath accumulation into a higher time frame PD array that aligns with the next level. That's all I'm doing. And then I overlay all my other context factors on top of that, right? Okay. So if we pull out and we go slightly wider, all right, so we go to a 15-minute, well, we're in a massive wider market maker buy model. Okay, so this is the sell side of the curve, buy side of the curve. This is a smart money reversal, first phase distribution. So I'm going to look for manipulation outside of the original reaccumulation on the sell side of the curve. You're going to get reaccumulation on the buy side of the curve. If you're bullish, which I am, you're going to look for manipulation, right? For distribution, for your next phase distribution. Okay, so for me, I've been talking about price wanting to get up into here. This is what I'm anticipating this week, right? So I can either do two things. I can either trade the manipulation, which is essentially what I was looking to do this morning, right? Utilizing the principles of accumulation inside fair value to take it down into a higher time frame discount from a higher time frame premium. Or if it failed this high and left the door wide open, and I've got supporting context for why price could run out the high, i.e. fair value gap above the doji, failed accumulation inside fair value model, I can look to trade long, trading the manipulation, right, into my higher time frame discount, aligned with my PDRA. And all I'm now doing is trading back out through the dealing ranges. Okay, so this is our 1 minute dealing range. This is our 5 minute dealing range. This is our 15-minute dealing range, right? Which is not changed because we did not close below. Okay, so all I'm looking to do is now trade back out into my premium, pay myself, 5 minute, pay myself, liquidity, 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 inefficiency, premium, trading back out through the dealing ranges from a higher time frame point of interest. Does that make sense? I get it's a lot, and some people don't understand it, or they can't take it in, or they just want to trade a 2022 model. And I get it. I get it if that's what you want to do, but if you want to trade the actual swing low, the very low with the tiniest amount of drawdown, like, I'm not shitting you, this was my trade today. That is my trade. 17 to 1R. You think I care about taking a losing trade? No. But if you're like, if you're entering in here and you're doing this sort of stuff, like that, this sort of trade, it just doesn't interest me. Like, it doesn't excite me. But if you want to learn how to trade that, that's what I do. I trade the turtle soup. Right? Into a higher time frame point of interest in alignment with a higher time frame X level with all the other context factors that I teach inside RP, mainly schematics, my models, all of my models, I've got 11 of them, to align yourself with price. It's that simple. And then the rest is just waiting, is patience, just allowing price to come to you and not forcing it, right? So we could have forced a short in here, right? We were looking for this. We could have jumped in here short, couldn't we? Of course we could. But, that would be chasing price in my view. Like, if I'm going to go short, I want this puppy to go into my exact point of interest and align with my XL to go short. Well, if I miss it, okay, cool, whatever, right? I'll wait for another opportunity. Well, the other opportunity was to go long, right? So patience, allow price to come to you. Don't force it. Have a mechanic in terms of how you're going to approach the markets. For me, it's turtle soup, so I'm always utilizing the principles of AMD. And then just understand market structure, right? If you can understand how candles work, and for me, it's undeniable with X levels, then it's just a case of overlaying your models and your context on top of that to support your trade. Right? Not really. The thing with the market maker buy model, right? Some people I use it as a macro viewpoint, right? I use it to align myself. Basically, I use it for context. I don't say, well, this is a market maker buy model, and that's exactly what I'm going to get in. Like, I utilize it in part for context forming. Like, for example, this I've just explained is a wider market maker buy. It forms part of my context, but it isn't a model in itself. You can't just say, oh, we're in a market maker buy model, let's just go long here, right? You got to be able to go onto the lower time frames to be able to find your entries within inside of that market maker buy model, right? So understanding a market maker buy model is great, but for me, it's not a model, right? You need a model that sits within a market maker buy model, right? But isn't 11 models a lot to learn and use? Ask anyone inside Red Pill. Guys, what do you think? Is 11 models a lot to learn? I don't know. You let me know. I've just given everyone inside Red Pill, essentially my full trading plan. It's up to them whether they want to what they pick from it. You know, not everybody trades every single model that I developed. I'm sure. But you know, my ability has been given to people to be able to trade any swing that they want. Right, with the right context, being able to trade literally any goddamn swing, and it's using those 11 models. But yeah, there's 11 models. You know, there's a discretionary series which is all principally based around market structure. So today's trade this morning was discretionary based off London, and then there's mechanical based entries. And then there's market structure based models as well. So it depends what you want to get out of trading at the end of the day. Like if you just want to go and learn one model and you don't want to learn about context, you just want to take some bog standard shit, which is like, oh, if price goes above the London high and we get change state and deliver and we see a breaker block, then we're going to short it and we're going to go down to the London low. Like if you want to do that, fine, but your consistency is going to be trash. Right, and you're probably gonna have to wait ages for that model to play out. If that's you, that's cool. Nothing wrong with that. But I like to know what price is doing at any given stage, and then I have the ability to say whether I want to take that trade or not. Right, I decide whether I take the trade or not. The market doesn't decide whether I take the trade or not. I decide. Right, if it's a high probability model, i.e. if I'm taking an H1 to M5, it's got to be inside of a higher time frame premium. I've got to have a higher time frame sweep into a higher time frame PDRA that lines with the X levels. I've then got to have context for why the M15 low is going to go, and I've got to have time to support it. I've got to have an inefficiently delivered M5 range. Right, and I've got to have a schematic which supports the model. Right, if I have all those things, I've got a high probability H1 to M5 model. Sure, I'll take the H1 to M5. But if I've got an H1 to M5 and it's in a high time frame discount, and I'm trying to trade short, and it's inside, I'm trying to trade a bearish H1 to M5, and we're in a buy day profile. Well, that's just dumb, right? So your ability to frame context around a trade is what is going to put you into the 60, 70, 80% bracket in terms of consistency. Right, your ability to read context. And that's the thing I pride myself most on, is my ability to read context, because it's the most important part of trading. Like anybody can learn a model. Like learning a model isn't difficult. You know, anyone can put a PDF together that says, oh, we're going to wait for a higher time frame sweep. We're going to look for, you know, yada, yada. Right? Anyone can do that. And people do that and don't know what the fuck they're talking about, and they still do it. Right? But your ability to know how to put that into the market, well, that's a whole different game. You know, that's a whole different level, right? And that's why I teach. But, you know, as I said, if you just want to learn a model, I'm sure there's people out there who can sell you a PDF. Live your life, and after a time, so I need to join. Yeah, absolutely. Yeah, I mean, it's essentially my life's work. I'm not a charity, bro. As much as I love everybody inside RP, and I want to see everybody become financially free and successful, a number of people have become financially free and successful, and are now full-time traders. I'm not a charity. So yeah, it's an in-depth course, which does cost, but there's no pressure. I don't care if you do or you don't join, but it's there for people who want to learn how I trade. And after a time, you feel more confident in a model that suits you, and sometimes several months align and several models align, which is a boss. Yeah, absolutely. 100%. Absolutely. Absolutely, yeah. You can use overlaying models for confluence. Absolutely. Like today's short, for example, as Jamal mentioned, H1 to M5, awesome. You know, if we got up into here, we had the accumulation inside fair value supporting the H1 to M5 final TP. Like all of these things, like, you know, you can overlay on top to build the confluence. speaking from experience, so Andy is one of our members. It takes a lot of time to learn all the models. In reality, you end up gravitating to a small number. Yeah, well, you don't need them all. In time, you will. You'll use them all in time. I promise you. I promise you. So yeah, that's the morning. Has anybody got any questions? Anybody got any questions for me? But yeah, beautiful trade. Nice little $1,000 trade if anyone caught that. Otherwise, I'm going to call my session here. Anyone got any questions on YouTube? Bum, 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 bum. Bum, 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 bum. We got what's the question? Let's have a look. Can you explain the market maker model offset thing? It was too fast for me. Yeah, sure. So, I mean, live your life. It's in Red Pill Uni, bro. But so you're always going to get start on the top. You're always going to get original accumulation, right? Okay, and then you're going to get your first phase distribution. And then you're going to go into reaccumulation. Then you're going to get second phase distribution, right? Then you're going to go into an SMR, smart money reversal, high probability breaker block, first phase distribution, manipulation into old accumulation on the sell side of the curve, buy side of the curve, right? And then you're going to get manipulation, and then you get distribution into your final pool, original accumulation, and you can look to take that out if you want, which is essentially what price is doing right here, right? As I mentioned, what I was looking for, right? ES to go and fill up here. Okay, so where we were today was right inside of here. Okay, so if we hop over here, where's my chart gone? There's my chart. Okay, so mind all this shite. So here's our original accumulation, distribution, reaccumulation, distribution, smart money reversal, first phase, accumulation, manipulation, distribution, second phase, accumulation, manipulation, distribution. All right. So this is accumulation, manipulation for distribution. One more question from me. I know you may not want to answer it and you respect that, but if you do, why do you think highly of other educators? Why do you think highly of other educators on YouTube? Oh, who do you think highly of other educators on YouTube? I'll be brutally honest with you. I haven't spent any time on them, so I couldn't say that with any clarity or anything. I haven't been through anybody else's material, bro, so I wouldn't know. Who do I like who I can give a shout out? honestly I don't know. Honestly, I don't know. There isn't anybody that I know that I don't know anybody who trades the way that I do, if I'm being brutally honest with you. So I can't say anybody even teaches the same thing as I do. I'm the one who developed X levels and the principles of a premium and discount to any single dealing range, and nobody else trades like that. And nobody has my models either. So I don't really know because I don't trade anybody else's models or anything. So To answer your question, I don't know. But yeah, it's like you just got to find. To be honest, I don't really. I'm not going to sit here and slander the way other people trade. There's 1,000 different ways to trade. It's just what resonates with you and what makes sense to you. That's what I find. Like, it took me ages to develop something which resonated with me. Like, for me personally, I was never happy not knowing why I couldn't frame an entry off the very low, right? I used to trade breakouts. I used to be a penny stock trader, right? So essentially what I'd wait for is essentially this at the open on a penny stock, and I'd wait for a pullback after a break of structure, and I'd take a 2 to 1 R. That was essentially my model, and I used to trade that a shit ton, right? But it always frustrated me that I didn't know how to trade the very low. And so it took me ages, it took me years and years and years to develop how to trade the actual turtle soup, because my background is business, I should say. So I've always been interested in risk and how to minimize risk, right? So when I see trades up here, and this is what I used to trade, it gives me the heebie-jeebies, right? Because, you know, this sort of trading really quickly leads to tilt. You know, if you start taking a couple of losing trades, or you don't know why this low is going to hold. So, you know, you can take models, you're like, well, this is inverted fair value gap, for example. I can trade on here. Well, if you're trading the inverted fair value gap, like, my question to people who trade the inverted fair value gap is like, do you not know why that low is held? And so my question is, well, if you know why that low held, well, why in God's name are you not trading that low and then parlaying in on your inverted fair value gap? Or if you don't know why that low's holding, like, why are you trading an inverted fair value gap? Because you, like, do you know what I mean? Like, what's to stop it doing this? Like, if you don't know why that low is going to hold, why in God's name are you trading that, like, this inverted fair value gap, right? So I spent ages developing, like, how can I get the very swing low to minimize my risk to the lowest amount? And that's where X level came in, and my understanding of price, right? It's just a culmination of years and years and years of putting it all together. And obviously ICT, right? I'm not taking all the credit. Jesus Christ, hell no. Like, ICT is fundamental to me, right? It's like, essentially what I trade is ICT, right? But yeah, it's like I trade turtle soups. I don't know many other traders who trade turtle soups, and that's my model, is turtle soup trading. I think there's one dude called Raid but I think he's a fraud, so I wouldn't recommend him. So I don't really know. I don't really know. But yeah, I hope that answers your question. If you got any other questions, let me know. I'm done for this morning. So congrats for those who caught the trade. If you are holding runners, just let it run. You got nothing else to do. That daily volume imbalance. Daily volume balance would be something that I'd be gearing up towards if I was holding runners, but I'm out. I don't have anything. I don't have anything left. De nada. All right, so just to reconfirm. So always looking for a PDRA inside of a high time frame X level discount if I'm bullish, right? We had all of this high engineered up on the high, right? If I'm bullish, I want to be inside of a high time frame discount, okay? Well, all the way back down inside of here is this higher time frame on the hourly discount, which align with being back inside this H1OB, right? I then need to go on to the lower time frame to find my PDRA. Well, this was my Exicorn, right? Highest up close SIBI supported by the order blocks. So now, just waiting for my triggers on the low. And now I'm looking to trade price back out through. But I have to have confluence and context as to why price is going to drive back out the high. Well, as I mentioned when we were in here, I said price is going to move higher because we had this doji with the SIBI sat just above. We had liquidity sat at 38 and we had the failed accumulation inside fair value. So even if you were going to go short, you would have shorted here. Even if you were shorting. Well, the fact it left the door open, I know price is coming back to it, right? So now it's just the principles of accumulation, manipulation, distribution from my higher time frame POI in alignment with an X level. right? So what I'd normally do is if I was trading a buy day, I'd be looking at my London low to my high and I'd be going long out of here. Well, this comes down to context. Well, I can't frame an entry off that low because we had the wrong SMT, right? And there was no reason for why this low was going to hold. If I'm going to take a low, if I'm going to take a trade, I have to have 3 steps. Number 1, right? If I'm bullish, I have to have a reason as to why my low is going to hold. Like if you don't understand, you cannot yet frame context for why your low is going to hold, you should not be trading, right? And obviously flip that if you're bearish. If I'm bearish, I have to know why my high is going to hold. So for me, the short this morning, I knew this high was going to hold. ES, wick behind this CB, MWOG, 50% of the MWOG, right? Where have my, I think I deleted that, I accidentally deleted that, one sec, where is it now? Don't delete it. Oh, I've deleted my MWOG, but it was 50% of an MWOG, I'll have to get it back. It also efficiently delivered this range, right? So I had the context on the high for why my high was going to hold. And then I need a model to engage with price. Okay. So 2, if I'm short, why is my high going to hold? 2, why is my low going to be ran? Well, we had a failed M5 con and we were inside of a higher time frame premium, taking it back into a discount. And then 3, I have to have a model to get in line with price. If I have all of those, I have a trade. But if I cannot do either of them, for example, if I cannot frame a reason as to why my high is going to hold, I can't do the trade. I have to have all 3. Right? So I could not take the long out of a discount of the London here because I did not have a strong enough confidence why that London low was going to hold. So what did I do? I waited for that low to go to something which I can frame as to why it's going to hold. Right? And then off she goes, right? Would filling the daily VI be the goal or just touching it? Let's have a look. Let's have a look. Yeah, I'd just be going just to fill it. I mean, my high time frame goal is actually for ES to go up to 18,950. Sorry, what am I saying? 5,950. So my ultimate goal is for ES to go up here. That's what I'm looking for. Whether we do that today, I don't know. Right, the jury's out. But if you want to hold a runner, low-hanging fruit objective for me would be to get into this daily volume imbalance, which is 21,415. So if you want to hold a runner for that, be my guest. At this point, who cares, right? Literally at this point. If you've still got a runner at this point, who cares? Okay, so the only thing you can do from this point, so if we just rewind this, oh shit. Which is what you want to be mindful of. So if you're trading a buy day, which is essentially what we're in here, this is your breaker block. This is your breaker block unicorn. All right, there's your BB. So for those of you who like breaker blocks, all right, just to take my point, this is the shit I don't trade. All right, where are you putting your stop? But that would be your last entry. The last thing is a break on a 1 back into a 5-minute discount. So for me, your stop would still have to be below this low. Until a new 5-minute DR low is put in, your stop is still below this low. So if you've still got a lamb to slaughter, your stop still has to be below this low. There's absolutely nothing stopping this coming all the way back down into a discount, even if you're anticipating higher prices. So you've got to make the decision in your head as to whether you want to let this run and take it into that daily volume imbalance, or, right, pay yourself and be content. Right? Because the only thing that I'm now doing, if I was still in this trade, is trade management. Okay, so the only thing that is left that you can trade on this day is a break of structure on the 1 minute back into a 5 minute discount, right? Which would currently align with coming back into this breaker block. If, however, we get a new swing low, which puts us in a new 5 minute low, my stop runs up below that 5 minute low. Okay, so at this stage you can't do anything. You're basically just letting that thing run. So your decision is whether you're going to let this go for this volume balance, or whether you're just going to terminate up here and just be content knowing that price can come all the way back down here. And what you're leaving on the table, right? What you're going to leave potentially wherever you got in, or if your stop's still below the entry, right? You're essentially going to leave probably $300 on the table to fight over 50 points. That's a call you've got to make. All right? That's a call you've got to make. It's not for me to make. It's a call for you to make. Whether you want to let this run or whether you want to be content with your trade. However, if you are going to let it run, you have to keep your stop below this low until you get a new 5 minute swing low, at which point you can then move your trailing stop. Right? Does that make sense? Kind of could be a long-winded answer there. But yes, I'd look for it to get into that daily volume balance. But you just got to be conscious of what you're leaving on the table and how you manage that trade. Chat with me. All right, guys. Well, I'm going to call it there. That's going to be my morning. Nice of you to join for anyone who was new, who hopped in. But yeah, just let them breathe. The only thing, if you're still in, all you got to do is just trail your stop below the 5 minute low, right? So your runner should still be below this low. If you want to just cut it here and just terminate your trade and be content, that's entirely up to you, right? Or if you want to let it run to the VI, that is, again, entirely up to you. That's your call. But that's it for me today. I am out. All right, guys. So take it easy. Have good ones. Enjoy the rest of your days. I'll potentially hop back in the PM just to take read with y'all if there's something that's interesting. If not, that's going to be me done for today, right? 2 for 2. London short, New York long. Hey, take it easy, guys. Have good ones. Abish bash bosh.